Hello traders, Bongse Lamini here. So this is my first official video, so I hope you will enjoy it, and there's so many more videos to come in the near future and in the future. I hope we'll have a great session today, so let's get started. So today, this is the first of the 5-part video series that I'm gonna record. The first of the 5 video series. Basically, what we are gonna be talking about on these 5 videos, we're gonna be talking about basic chart patterns, support and resistance, pin bar reversals, and inside buys, and also we're gonna touch on some trading psychology. So just a quick introduction on myself. My name is Sibongiseni Dlamini. I'm the founder and chief analyst of Interpair Asset Management. I studied electrical engineering at Mangosuthu University of Technology in Durban. So I did an apprentice with Standard Bank portfolio management, and also worked as a financial planner for Metropolitan Life. So after that, I started my own entity called Interpair Asset Management. So let's get started. So in today's video, we're gonna be doing the first, that is gonna be the basic chart patterns. So on the basic chart patterns, we're first gonna look at technical analysis. What is technical analysis? So basically, technical analysis, it is a way to predict future price moves using past information. So in that way, we use Japanese candlesticks to predict future price moves using past data analysis. So I'm sure everyone is familiar with Japanese candlesticks, but so we're just going to touch on the formation of a Japanese candlestick. So a candlestick on its own has 3 basic parts. So it has the body, it has the open, it has the close, it has the lowest point where the price goes, and it has the highest point where the price goes. So on this video here today, we're gonna focus on bullish price patterns and bearish price patterns, and also look at continuation patterns as well. So first of all, candlesticks are differentiated in many ways. So we're gonna look at a Maribuzu candle. A Maribuzu candle, it's where the candlestick has a full body on it. It doesn't have no wick. The open price of the candlestick is the same as it's the highest price of the candle is the same as where it opened, and the lowest price of the candle is the same as where it closed. So this signals that there's a strong move on this candlestick. The buyers were the one controlling the market on this one here, and the same as this one, the sellers were the ones controlling the market on this one here. So basically, a green or a white Maribuzu signals a strong conviction amongst buyers, while the red one or a black Maribuzu indicates that sellers here eager to flee. So just to have a real life market example, we look at here, the market was going down, and then it reversed here, and then it signaled that there is a strong level of buyers. So the downtrend here signals that the downtrend here is finished, so the market is going to continue going higher and higher and higher. So we're going to look at another one here, the bullish and the bearish engulfing pattern. So basically, bullish and engulfing patterns, it's where the market was going down, and then a strong bullish candle comes in, or where the market was going up, then a strong bearish candle comes in, and then it takes out all the buyers or the sellers of the previous candle. So this one is pretty much simple to identify on the chart. And then there is the pin bar or the hammer bar. So a hammer bar, this is the most widely seen and widely used pattern for reversal or for continuation. So this one is better known for a reversal. It is a candlestick pattern that consists of just one candle. Although with candlesticks, it's always best to view them in the context of the candlesticks around them. In particular, the candlestick just follows them in immediately. So on this one here, we're going to look at a real life market example. The market was going down. It was pushing down. It was a downtrend. It was pushing down. But suddenly, buyers came in here on this market, and then the hammer pattern formed, and then the market continues higher. And then it pulled down again, a hammer pattern formed, and then the market went that higher and higher again till it reached this point in here. So then we have another pattern here that is called the doji. So dojis, they come in different shapes and formation, but they basically mean the same thing. So what are dojis? Doji pattern is a candle where the open and the closing price are the same or almost the same. It can take many forms as shows here, depending on where the trading activity was in or at that period. So as we can see here, the candle opened here, and then it went up, it went down, and then it closed at the same price where it opened. Same as this one, the candle opened, it went higher, it went down, and then it came back, closed here. It opened here, it didn't go higher, it only went down, and then it came back and closed at the same price where it opened. So most of the time, dojis are seen or referred as reversal patterns. So in this live example, the market was going down, and then it went up, and then a doji formation formed on the trend line here, and then there was a huge drop on this market, and then the market continued again, and then a doji pattern formed again, and then there was a huge drop on the market. So there is a doji pattern that is forming here again. So basically, doji patterns are either reversal patterns, and they are usually widely used as reversal patterns. So there are many other forms of candlesticks or bearish or bullish patterns that a person can look at, can work on, just like these ones there and these ones here. But the main ones that I've just given and shown here today are the ones that are more widely used on the markets, and the ones that are easier to identify in this day and age. And as a beginner trader, it's best for you to try and learn as much as you can about candlesticks for future reference and to have a good career in trading. So to contact us, you can like our Facebook pages, Interprek Asset Management, or follow us on Twitter at Interprek Asset M, or follow me directly as Bongiseni Dlamini, as you see there, or Boxedo DJ on Twitter. You can call, text, or WhatsApp on 081-3086-500. So I'm glad you guys enjoy this video. Gonna see you on the next one. Bye bye.